What is good, guys? It's Rey-Jay back with another video, and in this one I'm going to be talking about what's going on with SPY and Tesla and the QQQ and a couple of tickers, break down the important resistance to be watching for, what happened with the data that just came out, and give you guys a very in-depth intraday update about the markets and how we should be going about this as we have the final hours before the market closes until CPI comes out for the final close. Before I break it down about all this information, before I talk about what's going on with CPI and the charts right now, let me just mention a couple of things real quick. Firstly, I am not a financial planner. Take none of this as financial advice. And also don't forget about the Moomoo link. The offer ends very soon. Put in $100 and you're guaranteed 5 free stocks with a $100 cash reward. Offer ends very soon. Check it out before they run out. With that out of the way, let's get on with the video. All right, guys, let's talk about the charts. Let's talk about the market. What on earth is going on? All right, so when we opened, or right before the market opened, the pre-market, I told you guys that we saw lots of choppy sideways price action. There was not really a clear direction. Then I told you that if you want to see this thing break down to fill this gap all the way down just below 430, you need to watch for confirmation of a clean break below the 50 EMA. And we failed to break it on the 5, and we actually failed. We tried and tried, we failed. We only had one temporary moment where it came below, but it came right back up. And this was kind of like, like a back test that happened before it came back up. Not a whole lot went on. Market was very sideways. Nothing really happened for the first hour and a half. And then what happened was 11 o'clock a.m. came. And I told you guys, if you're watching this channel, so right here, at 11 o'clock a.m. Eastern time, we had this very important data, the Consumer Inflationary Expectations Report for May. This was very, very important data. I would say CPI is even more important, but this was important for CPI, at least to some degree, because it tells us about the consumer expectations and also other expectations from other officials. And I told you guys the market would likely get a reaction to this. And what ended up happening was we did not react immediately. The market just remained sideways for some time, but slowly we started uptrending. Then the market slowly went higher and higher and higher and started pumping a bit. And we're currently at this high level in like the mid to high, 431s, holding up quite nicely. But why did this end up pumping? What did the data tell us that caused that to happen? Well, we could see right here, the expectation is 4.1% versus the forecast according to this was 4.2%. Zero Hedge is saying something a little bit different. They were saying that the New York Fed reported the one-year inflation expectation of 4.1% versus 4.5% being the expectation. So it's a little bit different, but overall, better than expected. However, right over here, you could see the New York Fed came out with another estimate, and they're showing that the 3-year inflationary expectations went up to 3% versus 2.9%. So once again, guys, very mixed data, but this was pretty good to see. I think because of how mixed it was, the market took a while to react, but overall it's better because the 1-year inflationary expectation did drop quite a bit, and the market did respond quite positively to this. That's why the market started pumping. But I need to remind you guys that yes, you could have made money on this, sure, but you got to be careful because this is going to be the last close until CPI comes out. And depending on your brokerage account, you may not be able to buy more positions. You may not be able to buy options or do anything like that. And it could be considered risky because we don't know what CPI is going to be. And I would be very careful if I were you, not financial advice. But looking at this, CPI comes out tomorrow. Tomorrow is Tuesday. It comes out 1 hour before the market opens. It is very important to be prepared for this. It is very important to hedge and do what's responsible. We're expecting a pretty decent inflationary report. The consensus is 4.1%. The forecast is 4.3%. And we're just going to see what we end up getting from it. But I personally secured most profits already. And I'm holding some positions just as a risk because I'm willing to take the risk. But I mean, once again, I'm willing to take the risk. I'm willing to lose money on those positions. I'm just going to be very careful nonetheless. And I just want to inform you guys that if you get a decent CPI, this would be very positive for the markets, and this would help fuel the narrative of the Fed pausing in June. If that happens, that would be awesome. If not, you always have to be prepared. But now let's break down these levels. So here's what happened to SPY, basically. So we remained quite bullish today. So if you look at the 30-minute time frame, we got this nice bullish crossover on the PPO. It was very, very sideways in the beginning, very hard to read in the very beginning. But after getting this nice bounce, this nice push up, this was the confirmed breakout right about here. And we got this PPO crossover right here. It's a little delayed, but it still helped. And you can see the trend has been favoring the bulls a lot more. Now, I'm not seeing anything else, at least from a bigger technical standpoint, but if you look at some technicals, what is good would be the fact that the monthly is very close to getting a bullish cross. I think the daily still is favoring the bulls. It's very, very strong. Weekly, same thing. I mean, the technicals are still looking more bullish, but I'm saying this to warn you because technicals are not everything right now. What's going to matter more is going to be the data, and the data could cause a very nuanced reaction. And it's very important to be careful with the data coming out. So, what does this all mean? Well, if we get a very bullish outcome, like I mentioned in my previous videos, if we get a low CPI and we happen to see the Fed pause, there's a high probability the market could keep going. The next major resistance zone on SPY is going to be between 440 and 442. But then, if the opposite happens and the market just comes down, we're going to see this thing come closer to like 420, even lower than that, maybe like the 410s, which is where we have a lot of these gaps. So, like I said before, I don't know what's going to happen exactly. Even if technicals are looking bullish, I'm still going to be very careful. And we're just going to have to wait and see just a couple of days because we're not going to fly immediately to those insanely high levels. It's not going to happen immediately, but we're going to have time regardless. But once again, I like to wait for confirmation. And the CPI report is going to give us more insight about what the Fed may end up doing. But now let me just break down a couple of things. So what resistances are we going to be watching on SPY? Support right now is where the 50 is. 431.2 is now going to be some nice support. And you could see we're stuck in this entire range that has a lot of resistance. So first off, you have to watch 431.5. That was previous resistance. Now it's going to be support. And if it continues to hold, this entire 431.75 to 432 zone is going to be some tight resistance. You can see we got rejected off 432 before and 431.86 just recently. So it's going to be kind of tight. If it breaks above 432, could make its way up to like closer to 433. That's going to be the next zone. 433.8, I believe, is another one. But anyways, for now, it's just very tight, and I would honestly just be very careful with this. I'm just sitting on the sidelines, holding some positions, but I'm willing to lose on those. It's just like a risk I'm willing to take. You have to leverage yourself and be very careful. I just want to note that big data is coming out for tomorrow. As far as Tesla goes, like I told you, Tesla is fighting this resistance zone. I drew out right about here, very close to it, right here. So 249.5 to 250 has been the zone of resistance on Tesla. Still fighting it. If we get some very good data, Tesla has a good chance of trying to push above. If not, it could just continue to chop around. I'd be careful. Like I said before, be very cautious. I'm not talking about shares or long-term positions, by the way. I'm simply talking about like options and trading. As a Tesla holder, I'm still holding long-term shares, right? I'm not going to sell them no matter what happens, unless we have some very, very bad news for Tesla, which I highly doubt, or like Tesla just completely flops, which I don't think it will. I was calling out Nio for the last couple of days, right? I told you guys Nio is looking good after earnings, especially. And if you look at Nio, this thing is still trending upwards. You can look at like the 4-hour time frame, not just the 5-minute. Still holding nicely. Got some bullish signals for now, and this cup and handle information, the inverse head and shoulder is still playing out. Looks quite nice. This setup looks pretty decent. Still trying to trend upwards. May have more room, but we're gonna have to wait on CPI. So, like I said before, still kind of risky. The triple Q. Look at the triple Q. It broke to the upside, looking very, very strong. And I told you guys, let's look at the 30-minute time frame. I didn't give you guys any true prediction on this. We had these support and resistance levels though. And what I warned you about is, especially in the morning, so let me actually bring up the 5-minute instead and then talk about the morning and then what ended up happening. In the morning, I told you that for the QQQ, looking at the 5-minute time frame, if it broke below the 50 EMA, this thing would come all the way down to 354. It managed to hold above it, so it didn't get that break to the downside. Then I told you that if it held above 356, this thing is going to likely push up to 357.5. And if it broke that, it could continue to push up to these higher levels and get closer to 360. I did not give you a prediction. I did not know what was going to happen because of the data. I didn't know what the data would cause. So I remained, very, very open-minded and told you both of the possibilities. And the more bullish possibility played out, and we got confirmation based off how it held above the 50. It actually broke above this resistance of 357.5. And once again, it's still looking very strong. Could have even more room. I think I'm not really seeing any divergences or anything. There's just no true sign. It's going to slow down around this range. It is slowing down a little bit based off just candles alone. But overall, looks very strong. Trend is very strong. Look at the 4-hour time frame. QQQ is looking quite nice. We're about to get a bullish cross, but like I said before, it looks strong. But here's the thing: I wouldn't be buying up here during this time. I would just wait on the sidelines and get ready for CPI, because CPI is going to cause a big move. If CPI is decent, this could increase the odds of the Fed pausing. If not, I'd be very careful. Okay, so know the risks. If we get a hot CPI, the market could get a rug pull. This is going to be your last chance if you're holding options. If your brokerage account does not allow you to trade during the pre-market. And I just want to warn everyone to be careful. Aapl is at this zone I was talking about. Aapl broke out. I told you guys if it held above 180, there's a good chance it would try to push. It broke above the 181 resistance I mentioned, and now it's getting closer to this next zone. I was talking about 182.5 to 182.75. It's currently at 182.81, actually 75, just kind of fighting, looking good. Nvda got very, very mixed response to the data and how the market was moving. It's just very choppy, very boring, not really doing anything. It pushed up to this 397 area, came right back down, trading sideways since. Amazon and Meta are both green for now. Market's still looking quite nice. But like I told you guys before, we got to be careful. We're almost near close, and some more is still to come. All right, guys. So anyways, thank you all for listening. That's what I have for this video. Get ready, and I'll see you guys later on for the final video of the day. Markets at the moon as the long term is very bright. And don't forget to manage risks, not financial advice. Thank you, and peace out.